Welcome back to the channel, or welcome to the channel if it happens to be your very first time here. My name is Troy, and in this series, I share with you guys 5 dividend stocks that I love for the following week. And what makes this list unique is all these stocks are going to have ex-dividend dates for this coming week, which means you're going to get paid from these dividends sooner rather than later.
Like tomorrow, maybe?
In today's video, I'm going to be sharing with you guys 5 dividend stocks that have outperformed the S&P 500 over a long period of time. They all have super low payout ratios and super high dividend growth rates. So if any of that sounds interesting to you, make sure you guys keep coming back every Friday at 8 a.m. Central Standard Time for a fresh list. Without further delay, let's go ahead and jump right into number 5 on this week's list, which is Erie Indemnity, stock ticker ERIE. Including today's video, I've now mentioned this stock 6 times right here on the channel. And if you go back to the very first time I spoke about this one on September 29th of 2023, Erie Indemnity is outperforming the S&P 500 since then. So let's go ahead and look at the numbers behind this stock. Erie Indemnity is a quarterly payer in the financial sector, paying $5.46 per share per year with a forward dividend yield of 1.3%. Erie Indemnity has been paying and growing this dividend over the last 34 years. They have a 3-year dividend growth rate of 7.21%, a 5-year dividend growth rate of 7.22%, and a payout ratio of 38.18%. Now, at the time of recording, Erie Indemnity was actually trading 23.34% off of their 52-week high. They have an ex-dividend date of January 7th with a payout date of January 22nd. And looking here at this chart, you're going to be able to see the growth of a $10,000 investment into this stock versus the S&P 500 over a 10-year time frame, while only reinvesting your dividends since then. Erie Indemnity would have turned that $10,000 into $58,476.12, which outperforms the S&P 500 by $24,519.08 in the same time frame. Next up, and coming in at number 4, is Owens Corning, stock ticker OC. Including today's video, this is now the 5th time I've spoken about this stock right here in the channel. And if you go back to the very first time I spoke about this one on July 7th of 2023, OC is actually slightly underperforming the S&P 500 since then, but the numbers on this one long term are really what you like to see, so let's go ahead and look at those. OC is a quarterly payer in the industrial sector, paying $2.76 per share per year with a forward dividend yield of 1.62%. OC has been paying and growing this dividend over the last 11 years. They have a 3-year dividend growth rate of 31.52%. A 5-year dividend growth rate of 21.68%, and a payout ratio that makes it all sustainable at 15.17%. Now, at the time of recording, Owens Corning was actually trading 20.49% off of their 52-week high. They have an ex-dividend date of January 6th with a payout date of January 17th. And same chart, looking at this one, OC would have turned that $10,000 into $54,901.53, which outperforms the S&P 500 by $20,944.49. Next up, and first one on the podium this week, is MasterCard, stock ticker MA. Including today's video, I've now spoken about this stock 8 times right here on the channel. And if you go back to the very first time I spoke about this one, way back to July 1st of 2022, MasterCard is outperforming the S&P 500 since then, so let's go ahead and take a look at the numbers behind this one. MasterCard is a quarterly payer in the technology sector, paying $3.04 per share per year with a forward dividend yield of 0.57%. MasterCard has been paying and growing this dividend over the last 13 years. They have a 3-year dividend growth rate of 14.03%, a 5-year dividend growth rate of 15.52%, and a payout ratio of 18.69%. Now, at the time of recording, MasterCard was only trading 1.02% off of their 52-week high. They have an ex-dividend date of January 9th with a payout date of February 7th. And looking at this chart, that $10,000 investment into MasterCard would have been turned into $64,525.57, which outperforms the S&P 500 by $30,568.53. We've already covered the top 3 stocks in this week's list, which means you know if you like this series or not. So if you do, go ahead and leave a like on the video. It's free to you and helps me out a lot. Speaking of free to you and helping me out a lot, if you guys really want to help me out, leave a comment in the comment section down below. Let me know what you guys think of this week's list, good or bad. I'll respond to each and every one of them. That helps me the most. I appreciate you all. But now let's get to number 2. Next up, and coming in second place on this week's list, is Intuit, stock ticker INTU. Including today's video, I've now spoken about this stock 11 times right here in the channel. And if you go back to the very first time I spoke about this one on July 1st of 2022, Intuit is outperforming the S&P 500 since then. So let's go ahead and take a peek at the numbers behind this stock. Intuit is a quarterly payer in the technology sector, paying $4.16 per share per year with a forward dividend yield of 0.65%. Intuit has been paying and growing their dividend for the last 13 years. They have a 3-year dividend growth rate of 15.12%, a 5-year dividend growth rate of 13.88%, and a payout ratio of 21.57%. Now, at the time of recording, Intuit was trading 10.66% off of their 52-week high. They have an ex-dividend date of January 9th with a payout date of January 17th. And looking at this chart over the past 10 years, Intuit would have taken that $10,000 and turned it into $73,989.96, which outperformed the S&P 500 by $40,032.92. And the stock I feel most strongly about that you guys must know about going in the next week and coming in at number 1 is Cadent, stock ticker KAI. Including today's video, I've now spoken about this stock 8 times right here in the channel. And if you go back to the very first time I spoke about it on April 7th of 2023, KAI is crushing the S&P 500, so I want to show you the numbers behind that market outperformance. Cadent is a quarterly payer in the industrial sector, paying $1.28 per share per year with a forward dividend yield of 0.36%. Cadent has been paying and growing this dividend over the last 12 years. They have a 3-year dividend growth rate of just 7.58%, a 5-year dividend growth rate even lower at 6.28%, both of which are lower than I like, but their payout ratio is super sustainable at 11.97%. Now, at the time of recording, Cadent was actually trading 18.41% off of their 52-week high. So again, another possible opportunity here. They have an ex-dividend date of January 9th with a payout date of February 6th. And here's where this one really took the cake. A $10,000 investment into Cadent 10 years ago, while only reinvesting the money they gave you in return, would have turned into $90,757.38, which outperformed the S&P 500 by $56,800.34. With that being said, if you guys made it here to the end of the video, first I want to say thank you guys so much for continuing to watch and support this series. And secondly, if you guys are watching this video after the date on the thumbnail, or in this case, January 6th of 2025, it would be in your best interest to make sure you guys are not only subscribed to the channel, but also ring the bell so you get notified when these lists come out, because every single stock in today's video is a quarterly payer, which means if you guys just missed the ex-dividend date I talked about in today's video, you now need to wait 3 long months before you get paid from any of these stocks, and we all know ain't nobody got time for that. With that being said, you did already miss the ex-dividend date for last week's high-quality list of dividend stocks, but if you guys are in the market for 5 more stock ideas, make sure you check out last week's video right here. But until next time, see ya.